Hello, today is Saturday, the 24th of March 2010. Today's video will be regarding the gold to silver ratio using the chart of Netdania. To go to the silver to gold ratio, you're going to have to go to more instruments. You can't see it on the screen, but on the bottom you will see a thing that says more instruments. This is going to pop up, and there is the gold to silver ratio. Now, do you notice, interestingly enough, that I can get the price of gold in many different currencies. I can get the price of silver in many different currencies, but I can only get one to gold to silver ratio because it's the same in every single country. You take the price of gold and silver and you divide it by each other to get the ratio. But to get the price of gold or silver in any other country, you use the exchange rate with the US dollar to figure it out. So let's get started. We're looking at the 2-hour chart for the gold to silver ratio. It has retraced just a little bit on the last couple of days as it managed to go to a high of 52.58. It's now currently trading at 51.40. Now, I don't know if he really just trades too much because I don't know a single financial instrument that allows you to trade the gold to silver ratio. Now, there's ways around it to make it happen, and then tangibly speaking, by exchanging gold for silver and vice versa, it can very easily be done. But with that aside, now let's take a look at where we are. Question is, will we bounce from this previous support level? And the answer would be no. The question again would be, will we bounce a second time from this level? Because on the third last candle, we already came down to the support level at 51.40, bounced up to 51.80, and now back lower. I don't know what the answer is, but we'll take a look at more longer term levels, do some Fibonacci calculations that switches up to the 4-hour time frame. Again, you're seeing how this major level, which was resistance, taken out, now back at that support level. And 8-hour chart, now we can figure out what the successful levels are going to be just using this bottom and this high. What we use is a calculator. What we need to do is we need to take the highest level, and the highest level, which was 52.68, I think. 52.58. We'll take that level and we'll divide it by the low. So let's just see what the low happens to be. The low in here is 47.60. So we take the high, we divide it by the low. That gives us 1.1. We'll put this in the memory recall if you want to use this for to do both Fibonacci levels. And we need to do this to the power of 61.8%, 38.2% to find the levels. So if we put this to the power of 61.8, multiply it again by the low of 47.60, this gives us a price objective down to 50.62. Which would be in or around this little area here. Well, we'll put this actually on a paint program. If you're ever on the internet, you see an image that you want to save, or maybe you want to use the technical analysis drawing tools that you see me do on these videos, just push the print screen button on your computer. We'll do that now. And then we will paste it into a paint program. This is MS Paint, and what we can see is the silver chart that will be being used for probably video later on, and we can see this is it. I can push this select button on the screen. You can't see me do it now. And then highlight the areas that maybe you want. You can cut and paste again, and there we have it. So let's draw some lines. $50.62, or not cents, but 50.62. That would be somewhere in or around right there. That would be the expected target. But there's also a thing called a 23.6% down retracement, which 1 subtract 23.6% is 76.4. So we take the number that we had before, we put this up to the power of 0.764, multiply the low of 47.60. This gives us a price objective at 51.35, 51.36, which is exactly, give by about 3 cents, where we are right now. So this is an area where it should have some sort of bounce. Not as powerful as it is in here, but still an area where it should bounce. Now here's the kickers now. If it bounces from this level, it successfully makes a lower high, especially if it stays below 61.8% from this high and this low on the rally. If it stays below 61.8% and makes it down again to this level, then what's going to happen is you're going to have the probability odds for this level to hold to go lower. And if it doesn't hold in here, your next expected target level is down towards this mark in here. Let's continue on further through some more time frame analysis. And within the daily chart, we can see right now that we got a high here and we got a low here. Now, how important is this mark? Well, we got a high that is marked at 58.18, it looks like, 58.19. We'll even say 58.20 just to make it easy, and then of course the low at about 47.60. So now let's clear the memory with the MC button on the calculator, and we'll take 58.20 and divide it by 47.20. I think it was 47.60, yeah. So divide it by 47.60, put it in the memory bank again, and we'll multiply this, or excuse me, put this to the power of 38.2%, then multiply the low of 47.60, which gives us a price objective to 51.40. Again, we'll push the print screen button again in here and put it into MS Paint, and there we go. So now we got 51.40. That's the level we got to look for. Can you see where that might be? The answer is exactly where we are now. We are at the exact Fibonacci level of the 38.2% from this high and this low. But we pretty much were there with the pierce below the level right in here. And then what occurred is it managed to make a higher low from this point here by stabilizing in here. Came back up to this level. A higher high than before, but instead of having a pierce below the level, it has a pierce above. A higher low again. So you see what's happening is by making the higher low, coming back to this level, you are increasing the probability odds that this level gets taken out. It has now, and what's currently being played is this level being held as support. And if this level is held as support, and you can see the further gains, you would be expecting this to go up to the 61.8% level. Therefore, we'll take the same level again, or the same calculation, put this to the power of 61.8%, multiply this by the 47.60 low, which would give us a price objective up to about 53.90. We'll just draw a quick little line on here. That would be the approximate area of 53.90. Have any further gains? That's the expected area for that of resistance. Let's continue on further. Let's look at the weekly chart. Alright, what we see on the weekly chart, the thing going way down and back higher. So this is the low. The low is, let me just see, you can see it on the screen here, 30.45. 30.45 on the left-hand side of the screen. Switch this up to the monthly time frame, and we have this going back to 2004. But I can take this back to the 1990s on this chart. This high is the high for the chart. This is a low. So significant Fibonacci to say the least. The high is 83.78. So we'll go on the trusty calculator again, and we'll put in 83.78, and we're going to divide it by the low. The low is 30.45. So 30.45 is the low, and now we have the difference of the high divided by the low. We'll save it in the memory. And we'll first put this up to the power of 61.8%. Multiply it by the low, which gives us a price objective to 56.92. Again, we'll take a print screen of this and put this into a Paint program, and we need to find a line at 57.92, so let's do that right now. That would be somewhere in around here. So obviously what we have seen occur is that it's had 2 resistance tests left within the area. And that's a little bit not so strong, and I'll tell you why. Now, whenever you come up to this level, you're probably supposed to find resistance. And as long as you make a higher low and come back up to that level, then you increase the chances that you take it out. So here's that higher low, and here we are back with an increased chance of taking it out. Well, now it didn't take it out, but what has happened, it has now made a pattern of a lower low. This low is lower than that one. Now that may not mean too much, for if it does come back to this level, then again the chances are increased that it will take it out. But if it's not going to be able to hold up well at this level, you'd have to take a look at what the next Fibonacci on the lower end is going to be. We calculated 61.8%. Now let's calculate 38.2%. So we'll bring back that number to the power of 382 and multiply the low of 30.45. Didn't want to do that. Let's do it again. Okay, to the power of 0.382, multiply the low of 30.45 to give us a price objective in at 44.82. Let's draw a line in at 44.82, which is pretty much 45. That would be your expected area. So now the question is, what are you going to hit first? And I can't really answer this for you, but if you can take a look at 2 different numbers, usually from point A to point B, if you can find clear enough reason that the chances of going to one of the marks is much greater than the other one, and your research is really, really, really good, then you have just calculated amazing risk versus reward ratio. For example, let's just assume, and we're just assuming, that there's an 80% chance that we're going to go here before we're going to go here. Well, what does that tell you? That you're going to go long on this chart, because there's a much greater chance of coming here before going down towards that level. Now, I don't know what those odds would favor, but I do realize that if it does manage to come down to just a pierce below 45, or in that 45 area, that there's a pretty good chance that it's going to find some sort of significant support level, and then what happens at that mark from that point on is very unclear. Let's just assume that it comes down here. It's both bullish and bearish for the market to go higher, but you come higher up just a little bit and you're back down again. Odds are now increased that you take it out, or if you're playing the Fibonacci game to try to find places of bottoms and tops, when it comes down to this level the first time, that's when you're going to like the bounce, not the second. Alrighty, thank you for tuning in, and have yourself a great weekend. Bye-bye.